For over a century, the Panama Canal has been the world's most vital maritime shortcut, connecting the Atlantic and Pacific Oceans. Now China is mounting a direct challenge with a $50 billion vision, a new trade corridor across South America. This isn't just another canal. China's plan combines a mega port on Peru's Pacific coast with a transcontinental railway stretching to Brazil's Atlantic shore. The goal? To bypass the Panama Canal entirely, reshaping global trade and shifting economic power. This project signals China's intent to secure supply chains and expand influence deep into America's traditional sphere. As the Panama Canal faces mounting challenges, China's alternative is gaining momentum, promising a faster, more reliable route for global commerce. By embedding itself in South America's infrastructure, China is forging new alliances and dependencies. The world is watching as this bold new chapter in global trade begins to unfold. At the heart of China's ambitious plan for Latin America is the Chancay megaport in Peru, a project that is transforming the country's coastline and reshaping regional trade routes. This state-of-the-art port is designed to handle the world's largest container ships, vessels so massive that they can't fit through the Panama Canal, making Chancay a crucial new entry point for global shipping. Operational since late 2024, Chancay is set to become the main gateway for Asian trade on South America's west coast, with advanced logistics and high-capacity terminals that promise to boost efficiency and lower costs for shippers. The second pillar of this vision is the Bi-Oceanic Railway, a modern rail line stretching across Brazil to the Atlantic, linking the continent's agricultural and industrial heartlands to the Pacific. Together, the port and railway form a seamless land bridge, allowing cargo to move efficiently and rapidly between the Pacific and Atlantic coasts, bypassing traditional bottlenecks. Ships from China could offload at Chancay, bringing electronics, machinery, and consumer goods directly to South America's doorstep. From there, goods are whisked across the continent by rail, reaching inland cities and industrial centers much faster than before. After crossing South America, these products can be loaded onto ships bound for Europe or Africa, opening up new export opportunities and trade routes. This new route could cut weeks off traditional shipping times, offering businesses a compelling reason to switch and making South America a more attractive partner in global supply chains. More than just infrastructure, these projects anchor China's Belt and Road Initiative in Latin America, giving Beijing significant leverage over regional trade and deepening its influence in the hemisphere. The result? South America's resources and markets are now more directly connected to China than ever before, setting the stage for a new era of intercontinental commerce and cooperation. The Panama Canal, completed in 1914, revolutionized global trade by slashing weeks-off shipping routes between the Atlantic and Pacific. This 51-mile waterway became a critical choke point, handling about 6% of all seaborne goods. For the U.S., the canal has been a strategic and economic lifeline, enabling faster trade and military movement. Its ingenious lock system lifts ships over the isthmus, making it a marvel of engineering and reliability for over a century. The canal's control has long symbolized American power, shaping global commerce and geopolitics. In 1999, Panama took over, but the U.S. remains deeply invested in its security and neutrality. The canal's legacy, a testament to American ingenuity, and a linchpin of world trade for more than 100 years. Today, the Panama Canal faces a crisis not of engineering, but of nature. A historic drought, worsened by climate change, has drained Gatun Lake, the canal's freshwater lifeline. With water levels dangerously low, the Canal Authority has slashed daily ship transits, creating massive maritime traffic jams and weeks-long delays. The economic fallout is severe. Hundreds of millions in lost revenue, skyrocketing shipping costs, and major companies rerouting around South America or Africa. Some shippers now use costly land bridges across Panama, but these are no substitute for the canal's efficiency. The drought has exposed the canal's vulnerability and shaken its reputation for reliability. Panama is considering a $2 billion water project, but relief is years away. As the canal struggles, the world is forced to reconsider its dependence on this once unshakable shortcut. China's ambitious South American corridor could fundamentally redraw the map of global shipping, introducing a new era of competition and connectivity between continents. By offering a faster, higher-capacity alternative to the aging Panama Canal, this corridor challenges the status quo and could reshape the flow of goods worldwide. The Changsay Port and Bi-Oceanic Railway promise to cut up to 2 weeks off the journey from Asia to Brazil, a game-changer for logistics, efficiency, and cost savings for shippers. Ultra-large container ships previously too big for the Panama Canal can now dock in Peru, opening the door for a new class of maritime trade to reach South America directly. This means more goods can be moved at lower costs, increasing the competitiveness of South American exports and reducing shipping bottlenecks. Crucially, this new artery will be largely controlled by Chinese companies, giving Beijing unprecedented influence over a vital trade route in the Western Hemisphere. This reduces Beijing's reliance on US-influenced routes, allowing China to bypass choke points and assert greater independence in global trade. For Brazil and Peru, the corridor means quicker, cheaper access to China, their top trading partner, boosting exports of soy, beef, and minerals, and opening new opportunities for economic growth in these countries. But this deepens economic dependence on China, raising questions about sovereignty and the long-term impact on local industries. Local fortunes and jobs are increasingly tied to Beijing's policies and the stability of Chinese demand. If successful, the corridor could permanently shift global supply chains, altering established trade patterns and alliances. Trade could be diverted away from the Caribbean and Gulf of Mexico, impacting economies that have long relied on these routes. A new center of gravity for world commerce may soon emerge, anchored in South America, oriented toward the Pacific, and powered by China's vision for the future of global trade. China's South American ambitions are unfolding amid fierce US-China rivalry, especially in what Washington has long considered its backyard. The Panama Canal, once a symbol of US dominance, is now a battleground for influence. After Panama recognized Beijing in 2017, Chinese firms surged into major infrastructure projects, raising alarms in Washington. The US responded. In 2025, BlackRock, an American firm, took control of Panama's 2 key ports, previously run by a Hong Kong-based company. Security concerns persist, especially over Chinese-made cranes flagged as potential cyber risks. Panama's government walks a tightrope, balancing US ties with the lure of Chinese investment. Public opinion favors the US, but economic realities keep China in play. Each contract and project is now a move in a high-stakes geopolitical chess game. The struggle for Panama is a microcosm of the broader contest for control over global trade routes. The future of global trade hangs in the balance, shaped by the fortunes of 2 great corridors, one a century-old marvel, the other an ambitious vision still taking shape. The Panama Canal faces an existential threat from climate change. Its survival depends on finding a sustainable water solution. Prolonged droughts have already forced authorities to restrict ship traffic, raising fears about the canal's long-term viability and the ripple effects on global supply chains. If Panama succeeds in adapting, the canal could remain vital for decades, continuing to serve as a lifeline for international commerce and a symbol of engineering ingenuity. If not, it risks fading into irrelevance, its once bustling locks becoming relics of a bygone era. Meanwhile, China's corridor is a bold gamble. If completed, it could shift billions in trade and cement Beijing's influence in South America, opening up new routes and opportunities for global shipping. But the project faces daunting political, environmental, and logistical hurdles, from fierce local opposition to the immense challenge of carving a new path through difficult terrain. Failure would be a costly lesson for China, and a reminder of the risks of mega infrastructure bets, where ambition can collide with reality. The outcome of this rivalry will shape the 21st century, determining who controls the arteries of global commerce and who sets the rules for the world's trade flows. One thing is clear: the era of the Panama Canal's unchallenged dominance is over, and a new chapter in the struggle for global trade supremacy has begun, with the world watching to see which canal will define the future.